All right, it sounds like this is working. Good afternoon, everyone. Thank you for joining us in your great numbers for this new Allianz talk focused on the role of standardization to mobilize private investment for the SDGs. So, my name is Venon, as just announced. I'm the Executive Director for the Center for Development Finance Studies, and I'll try my best to moderate this important session. I think we're almost at the stage where we can start looking over back at the last 2 days, and I think it's obvious to everyone that the mobilization of the private sector has been at the center of many conversations, that its importance is recognized by all. What is equally prevalent and perhaps less comfortable is the fact that in spite of its newfound status as a priority for the development finance system, the mobilization of private sector capital specifically has yet to deliver anything like the scale that we need if we hope to achieve the SDGs and to fill the associated financing gap. Just to illustrate this, for example, the joint report of the MDB Task Force on Mobilization in the latest iteration released in April suggested that together, 25 of the largest MDBs and DFIs managed to mobilize just $23 billion in private direct mobilization. On the blended finance side, our very good friends at Convergence highlight in their State of Blended Finance report for 2024 that the aggregate volume of financing delivered by blended finance stands at $15 billion. Now, the idea is, of course, not to belittle the very real efforts that help deliver these achievements, but rather to state the obvious that these numbers are still very far away from what we need to reach to hope to fill this financing gap. So why that might be, our observation has been over the last 10 years that development finance on one side and capital markets on the other have grown, sometimes along separate paths, that this divergence has created gaps that it is now our collective duty to bridge. So this session is really dedicated to looking at some of the solutions that are capable of bridging these gaps. To do so, we are fortunate to welcome as our keynote speaker a member of the Sustainable Finance Advisory Committee of the Federal Government of Germany. This committee specifically has a working group dedicated to delivering recommendations around international engagement and development finance. So I would like to welcome now Frank Scheidich. Frank is the Global Head of Senior Executive Banking at DZ Bank. He's also the Regional Chair of the British Chamber of Commerce for Rhine and Main, and importantly, a member of the Sustainable Finance and Advisory Committee and the co-chair of the working group. So, Frank, please, to share some of your findings. I yield the floor.
Sure. Good afternoon, ladies and gentlemen. Welcome this wonderful hall here, I have to say, from the old Börse and the Trade Chamber of Hamburg. A standard setting to activate and scale up private investments to finance the SDGs. That is of very importance to all of us, because as you know, or some of you might not, the current annual gap is between $2.5 and $4 trillion. This is way too much, and it will not end good if we are not able to close that. With just 17% of the SDG targets being on track to date, there's definitely a need to speed up. The Pact for the Future, which was taken place on the 22nd of September this year, the world leaders adopted, obviously, a landmark declaration. The pact compromises 56 actions covering. In Chapter 1, which is obviously, as a capital market member and expert, one of the most important chapters to me, the sustainable development and finance for that is most detailed in agreement to date that the UN was ever reached on the need to reform the international architecture for better representation and serve development of the developing countries. I don't go through the details because we have just 4 minutes. The barriers for private sector money is corruption, weak government structures, geopolitical games. I guess you all know what I'm talking about. No international law acceptance in those countries often, neither a local financial or capital market environment. Capital markets is definitely the key to the success. It's a huge opportunity for all members, and in particular, the best chance what we have for the developing countries. We have the money, that is the good news, and we have the right financial instruments. The challenge is way more systematic. Country-specific needs need to be taken in account. Investor-specific needs as well. Otherwise, you can create a product and no one has an interest to invest into. Very important is that the ratio fits. In the beginning, you will have more from the public side, particularly to secure the first loss pieces, depending on the instrument we're going to go for. Later on, once the market has an acceptance among the investors, more and more the private sector will kick in and take over, and then the question is if public support is needed at all by then. But we need to create over time local market acceptance. That means as well local market currency. The dollar is your death. Go away from the dollar issuance. A medium step, surely. The euro is as well a hard currency, but at least it's an interim solution. Europe doesn't use the euro as a weapon. And if you think America is big because of its nuclear arsenal, you are wrong. It is the dollar. And now, please give it a chance and to discuss that. The euro and Europe will help you. In particular, Germany is supporting that and its members of the European Union. I'm happy to talk to you about that later in the break. SMEs, SME finance is also a key to it. But here we have the NGFS. This is a network for greening the financial system, central banks. They could be of help because a local central bank of those countries could use a minor piece, 2 to 3 minutes, to finance and invest in particular into those local market bonds. I have to come to an end. There's so much more to say, but we have already the green bond principles in place, we have social bond principles, sustainable bond guidelines, and we have the ISSB based in Frankfurt and in Canada. It's a very important, notable thing that the G7, the G20, and are supporting that. They're calling for it. So please give us a little trust and make sure that you have not just the questions, walk the talk. Yeah? And hopefully we stay here in 1 year's time and can measure by example and success. Thank you very much. I'm very eager to listen to this great panel now. Thank you.
Thank you. Hi. Thank you very much, Frank, for giving us quite so much exciting food for thought. I'd like to now invite my honored panelists to join me on stage so that I may introduce them. If you can sit at the end, number 2. No, you're number 2. Yeah. Up. Just the second state chair. Yeah. Yeah. Thank you. Okay.
Hi. Hi, Vera.
How are you? Good to see you. Good. Hello. Nice to see you.
Hi. Hello.
Hello. Hi. Mmakgoshi.
Hey. Flasbarth.
Good to see you. Yeah, good to see you again.
All right. Well, good afternoon, all. Thank you for taking the time to be with us today. So I'll introduce you, not necessarily in the order of sitting, so we have this afternoon with us Jochen Flasbarth, who is the State Secretary at the German Federal Ministry for Economic Cooperation and Development, Patricia Peña, who's an Associate Assistant Deputy Minister of the International Assistant Partnerships and Programming Branch of Global Affairs Canada, Claus Stickler, Managing Director and Global Co-Lead at Allianz Investment Management, Mmakgoshi Phetla-Lekhethe, Head of Asset and Liability Management at the Treasury National Treasury of the Republic of South Africa, and finally, Dr. Vera Songwe, who is the founder and chair of the Liquidity and Sustainability Facility, senior fellow at the Brookings Institute, and importantly, the co-chair of the advisory board for the Hamburg and Sustainability Conference. So thank you all for joining us. I will start with you, Herr Flasbarth, if that's okay. I think we've discussed a lot the importance of private sector mobilization. It would be very useful for us to give us some context as why you think this is a priority and imperative for the German government. I also noted, of course, that Chancellor Scholz, in his opening address, mentioned an initiative that BMZ has been working on with stakeholders with a focus on standardization. So, of course, would be very grateful if you could tell us a little bit more about that and why standardization is particularly important.
Yeah, thanks a lot, and very happy to be here. The end of the first HSC is already in reach, and I'm happy that still so many are participating here. And the private sector mobilization is one of the key issues to reach the SDGs, to speed up. And I will tell you and share with you a little story, and that was prior to the Paris conference, to the Glasgow conference in 2021, the incoming president, Alok Sharma, asked me and the Canadian colleague, Jonathan Wilkinson, to do a little favor for him. And that was to come up with a 100 billion delivery plan. It was obvious that the industrialized countries were behind their promise to provide 100 billion annually from 2020 onwards. And so he wanted to minimize the damage, I would say, that Jonathan and me should work on where are we, what are the reasons that we are behind, and what is our perception, how to reach the 100 billion as fast as possible. And the key finding there was that, yes, there was not enough budget money provided for the 100 billion, but that was not the key problem. Compared to the earlier assessments, the leverage factor was much lower than everyone expected. So we worked on that and what we could do, and we thought about some instruments. And that was exactly when I moved from environment to development. And then I thought, oh gosh, the problem is bigger than I thought, because now we are not dealing only with a climate finance, we have the whole set of SDGs. And I established a task force that would provide the best available information for me, what to do to get the leverage factor higher, to get more private money for each and every dollar or euro. Euro, of course, message got, and to get as much as, let's say, sustainability out of that. And one point we discussed yesterday, that is risk perception. So the risk perception avoids investments specifically in those developing countries with a higher level of uncertainty. So how to do that? And we are establishing a database on that. But the other one, and now I'm at the standardization, was, I got a better understanding after discussing with many experts about that. A lack of standardization is one of the biggest obstacles to organize private capital investments in sustainability, investments, funds, businesses. So it's what I understood. It's once we agree on one language or we use one language, it's easier to communicate. Usually we nowadays do it in English, but the same applies to the capital markets. They need to have a language. That's how I'm translating it as a non-specialist into that. And therefore, we need to have the standards to organize vehicles that are easy to inject into the private investment capital markets. And that will be the Hamburg Sustainability Platform. That was the announcement of the Chancellor yesterday. We are collaborating since a couple of months with a lot of colleagues. KfW is doing a wonderful job together with our partners from Allianz, but also from CDPQ, partners from Canada, France, UK, and South Africa. We will, I tell you the truth, we hope to be here ready to do all the signatures and to establish it here on the spot. But speaking with some of our partners, we came to the conclusion it's wiser to wait a couple of weeks more, because there are a number of partners who are interested to join us, and the signal to the market is much more powerful if we wait a couple of weeks and months. And as the next Hamburg Sustainability Conference is already around the corner in June, this will be done then, but we are already in progress, and it's really one of the great experiences in the run-up of this HSC, that we can change the reality for capital markets. We need to collaborate, and then if we agree on the standards, we hopefully will set the basis for much bigger investments.
Excellent, thank you. Well, we will be looking forward to that, as well as to the next iteration of the conference. You mentioned Canada as a partner, so I'll turn to Patricia Peña. I've had the privilege of interacting with your teams over the last weeks, months, years, around the work on mobilization of private capital for projects in emerging markets and developing economies that are aligned with the SDGs. Can you share some of these experiences, perhaps specifically where they pertain to standardization, and what you think Canada can bring to this platform?
Yes, thank you. Good afternoon, everybody. It does feel like we're in a marathon of discussions. So I thought what I'd do is maybe just say, what has Canada done, what we learned, and where we think we're going, and hopefully keep that to our 4 minutes. So we really began I'm going to call this an adventure in 2018, following the commitments we made during our last G7 presidency in Charlevoix, commitments to innovative finance. And so we did a couple of things. First of all, as a country, we looked at the kind of authorities that we have to do this type of work from within our international assistance work, so that we could actually mimic debt and equity to test new approaches, because we were talking a lot about it, but in fact our own regulatory framework didn't allow us to do that. We also created FinDev, so our own DFI, and then we started kind of building the plane as we tried to fly it. So now, kind of 6 years on, we've actually made some progress. We start small. We've roughly had about 15 blended finance instruments structures that we've put in place. And that sounds like a very small number given the magnitude, but when you're first starting off and doing something for the first time, it really takes a lot. And some of it is the technical aspects, but the other bits are just the whole ecosystem around you, getting used to it, and accompanying that with technical assistance in the right spaces. So what have we learned? Well, the diagnostic that everybody has given in this room is exactly what we faced. We engaged private investors directly. We learned that the bespoke investment structures that we were putting together, but also the time, really was a huge dissuasion to kind of coming to the table with us. It just took too long, and it was too complicated and unknown. And one would think you've done it once. When you replicate, or when you do it the second time, you say, okay, well, let's just copy it. Well, it turns out that wasn't the case at all. It was like starting from scratch. And so we're here, and I'm very pleased to be at this discussion because of this commitment to kind of standardization. We just simply can't afford not to come together and figure out a bit of a model or a series of models. The other thing is that there were some elements around impact indicators, geographic, sectors of focus, where there was a lot of debate or discussion. And I think there's an option now from our learning to kind of see how we can streamline some of that. And you mentioned leverage, the leverage factor, like were we actually placing our concessional financing in the right place so that we were maximizing the leverage and not crowding out the market. And so we're still learning. I mean, So some of these funds have been in place for a couple of years. I can't tell you that they're necessarily delivering because they're multi-decade investments, but they are certainly on the right path. And as we learn, we can move forward. And speaking the language with our private partners. Bureaucrats are great. We make up all sorts of words that nobody outside understands. And then we don't understand why it's hard to collaborate with us. So where do we go from here? Recently I had a chance to look at, there's a booklet of case studies that a few people in this room have been involved in. The title is Blended Finance Best Practice Case Studies and Lessons Learned. To kind of actually just create a bit of a compendium. Certainly for us, that's very important and is a timely contribution to the discussion. I think we are looking at how we operate and very much want to do so in the context of working with others. The Hamburg Sustainability Platform, I think, is very exciting, and we're committed to, as a small group or as a larger one, really continuing the momentum that we have. Recently, we renewed one of our innovative finance programs, and we've announced a new concessional facility within FinDev. So having just been created 6 years ago, or announced 6 years ago, already kind of adding to that. And then we're looking forward to our G7 presidency this coming year. So these types of discussions, we hope will feed into the priorities for that, and then into the financing for development discussions and wider discussions also at the G20 with our South African friends. Thank you.
Thank you very much. Well, I guess it's about time we heard from the private sector. So, Herr Stickler, I guess you're perfectly positioned to tell us a bit more about what some of the obstacles that we are facing in raising private capital from institutional asset owners, either directly or through investment managers. Would also, of course, be very good if you could tell us how standardization is capable of addressing some of this and what the platform should focus on to deliver that.
No, thanks a lot. Let me start, Thomas, with a few aspects which are not obstacles, but quite often mentioned. So it's not a lack of willingness. So I see, other than maybe 3-5 years ago, that people, the various stakeholders are really highly committed to make this private-public partnership really work. Secondly, there is not a lack of knowledge. There are really good examples all around the globe. And thirdly, it's not a lack of interaction. So we have very, very positive, very constructive interactions with the KfW, DHG, with FMO, with BII, and many others in that area. So it's not this quite often mentioned lack of, let's say, willingness and interaction. No, it's a lack of an effective and efficient operating model. So we are producing, and I include ourselves as institutional investors as well, we are producing like a manufactory in the 17th century. And now we need to step up and industrialize. And let me use an analogy. So we are all here winemakers. We are producing beautiful blends. So far, so good. Nevertheless, the thing is, for each and every blend, we design a new bottle. And this is not the way we can interact if we really want to scale and speed up. And this is the thing. I'm not saying that providing vehicles for blended finance investments is like the production of bottles, but we can do much better when it comes to standardization. So really, and standardization means basically two things for me. First, we need to decouple the content piece. Which SDG do we want to support where, with which projects, from the, let's say, provision of the vehicle itself. So the technical, the administrative part. So up to now, it's always commingled, and therefore this takes forever to get this thing done. Secondly, we need to provide, let's say, archetypes, modules, in a kind of building blocks philosophy. So what kind of first loss do we want to provide? And here not offering 250 different models, but 3 or 4. What kind of legal structure, what kind of standard documents do we want to provide? How does the reporting work? And then we could go even one step further to think about how to pool concessional capital and how to really provide a matchmaking platform between projects and investors. So this is the idea of standardization. It's not the standardization of the content, no. It's the standardization of the technical vehicle, and the Hamburg Sustainability Platform can be really a major contributor to make that happen, and therefore I'm so happy to be here and really to do a little bit of marketing, to bundle forces and to work and make this thing happen, to make it really investable also for smaller and medium-sized investors. Thank you.
Thank you very much, and thank you for introducing the imagery of wine. It certainly helped me focus. Turning to you, Mmakgoshi Phetla-Lekhethe, first, very happy that you could join us. The realization has been, over the last few years, that the mobilization conversation is perhaps understandably, given the need for scale, focused on mobilizing institutional capital in advanced economies. That said, certainly there is a case to be made for the fact that including in the institutional investors and financial institutions in developing economies is important, not just because it's technically a logical step, but also because it is important to make sure that we deliver a just and shared sustainable economic development by giving them that exposure. What is your assessment of the importance of the mobilization conversation for these investors, for these pools of capital in developing economies, and for the banking sector?
Now, thank you for inviting South Africa to join this platform, and we are looking forward to it evolving and supporting us. I think as South Africa, we have been on this road of looking at various options to mobilize private sector investment. And I think for us, what is key now is scale. And if there is one suggestion I would make to the partners is, as we start with this, and I liked what was said about maybe having 3 or 4 different platforms, but for me it's about the value that this brings onto the African continent with the free trade agreement being signed. Trade financing become very important, but what is the bedrock of that is infrastructure investments. And so if we could ensure that what we do here has some form of regional flavor to support countries that are with their unique circumstances, and for us as a region in Africa with so many landlocked countries, I think infrastructure investment is something that we really can, the private sector can help de-risk for our countries. So. Okay, so with that, I would want to say that we do support this standardization of credit risk, de-risking platforms, and we will be part of this. In our experience, I think, as I said, we've already experienced with this. We ran one of the most successful renewable energy investment IPP programs. We've been able to raise so far close to $20 billion US. So that's good. The bad part about it is that it's all gone onto the state to guarantee it. So as we see it, because I manage the book, we're sitting on a contingent guarantee of close to 18 billion. Which basically means that we're matching 1-for-1 the investments that have come in. There's a good side to it because it's the best performing book that I sit on in the Treasury because it has not been called. So this is something that we have tested and we know that it works, and I don't see it being called. So we also have an infrastructure fund that we have set up, which is also a blended financing facility run by our Development Bank of South Africa, and it also has an ambition to raise close to 100 billion for investments. And so far, it has been able to raise funding on the back of the commitment that the government has made. So this initiative, I think, is on the back of what we have been trying to do, and we know that it works. We've seen it working. I think, as I said, it's about scale. And for us, it's about de-risking our own balance sheet as governments to be able to do more. And that is where we see the role of the private sector coming in to play in that space. At the moment, we have realized that there are some sectors that will take a little bit longer to bring in to finance using private sector money, and I think as governments will be willing to take those. But take, for example, transmission financing, which in South Africa we are piloting now to do financing of transmission through an IPT, a boot IPT, bringing in the private sector. So the platform that we are establishing, which I'm hoping we will learn a lot from this, is really to bring in institutions that provide credit risk guarantees, and we then take in a little bit as well in there, but we open it up to the private sector. So these are, in my view, these are doable platforms, and the public sector is there. We're willing to put in, but we will not be able to scale up if we only focus on public sector financing. And therefore, private sector financing then becomes very important. And I am quite pleased to see that, because for me, the role of the reinsurance market is very important. And I'm quite impressed to see that one of the partners comes with that experience, because we have just so little scope in the continent in terms of that, and it becomes very important for long-term infrastructure projects.
Well, look, that's very scope for partnerships on that very topic, but thank you very much. Turning to you, Dr. Songwe, whenever we mention standardization over the last few years, that generated very real fears around the impact, right? The idea that if we were to standardize, and I guess that does go to some of the remarks of Herr Stickler, we would somehow deliver lower impact. Do you share that concern? And importantly, what do you think the Hamburg Sustainability Platform should focus on in this particular context?
No, thank you very much. Let me start again by congratulating the Hamburg Sustainability Conference. Wow. I think on day 2, we are already seeing some really good results. Having created now and founded the Liquidity and Sustainability Facility, I think one of the clear messages that you get from the private sector is the need for standardization. We are calling this session standardization, but in some sense, I think what we are talking about is acceleration of investment for growth. Really, that's what it is. And to be able to accelerate investment, we need scale. The magnitude of the problem is in the $1 trillion. It's $2 trillion. We cannot be doing $100 million projects to be able to get to the $2 trillion that we need for the climate crisis. And so essentially, we need to be able to agglomerate. I think that there is enough out there today in terms of what is needed to be done. And we were talking, for example, yesterday with Prime Minister Mia Mottley about the need for water investments across all the small island development states. This is an agglomeration of about 23 small countries that all need the same kinds of investments in the same kind of problem to be able to solve it. And we cannot do it country by country in retail. I think what we need to do is create new asset classes that standardize so that we can bring the CPDQs of the world with huge investments to come to bring some resolution to these problems. But to standardize, I think we also need the legal frameworks to be able to be standardized as well. It's not enough to create a vehicle. You then need, I think, sort of the Basel framework, Solvency II, and the rest, to be able then to make sure that when we create this, particularly development frameworks with MDBs involved and bilateral capital, that these vehicles are rated accordingly. Because this is a very important part in terms of the cost of money and the deployment of capital and how fast one can deploy it. So you do need to be able to standardize that. With the liquidity and sustainability facility, what we have found is that if we don't standardize the vehicle very quickly, then you don't know, nobody knows exactly what you're providing. And so the bespoke nature requires a lot more effort, takes a lot more time to develop any kind of product. I think you talked about the development of capital markets on the continent. We are looking to create asset classes on the continent where people can deploy capital very quickly. If you create an index is the best example of standardization. And if you take the example, for example, the JP Morgan Emerging Markets Index, is a standardized index. Everybody knows what's in the index. Everybody knows the criteria. India was just admitted into that index. $100 billion of investment money will be going into India automatically. This is the power of standardization, is that you don't have to retail to look for the capital that you drive into your investment. And so I think standardization is really great. But again, we have to not say that standardization does not mean that when you need specificity, we cannot do specificity. We should standardize, but allow for, I think, those odd and uneven cases where you need to provide a very definite solution to a particular problem.
Thank you very much, Dr. Songwe. I think, thank you very much to all our panelists. I think you've given us a perspective from different angles of this very important question. We are under some time pressure because we want to hear about the various stakeholders that will build this partnership. I just would like to add one perspective. Financial markets without banks are a problem. And we are fortunate to have here in the front row, I see Marie-Aimée Bourri, who is the head of impact-based finance at Société Générale. So if I can ask you very briefly to just give us your thoughts about standardization and what this stands to achieve.
Thank you very much, Thomas. So 3 points I would like to make. First, simplification, before standardization. So can we please not standardize the overcomplicated bureaucratic processes that exist today to access catalytic capital? And maybe can we remove the bottleneck of accredited entities to access this catalytic capital? Maybe the platform will achieve that. Second thing is also I think it's essential to put back subsidiarity at the core of DFIs and MDBs business models. Currently there is still too much crowding out versus crowding in. So can we have ambitious targets from the DFIs and MDBs and the donor countries that fund them? Ambitious targets of mobilization ratios, and maybe can we have league tables on private sector mobilization, where we can have transparency on who's doing best. And finally, don't forget the private sector in the decision room of this platform, not just consulting them, but also having banks, asset owners, asset managers in the governance, so it can really work for everyone.
Thank you very much. Standardization is closely associated with the concept of operational efficiency. We're going to try and demonstrate that right now as I invite some of the stakeholders that will build the Hamburg Sustainability Partnership to the stage for a short statement. So first of all, if I may ask Mr. Thani Mohamed-Soilihi, Secretary of State for Francophonie and International Partnerships at the French Ministry of Europe and International Affairs. Pleased to meet you.
Monsieur le secrétaire d'État, cher Jochen, Mesdames et Messieurs, en vos grades et qualités, je suis très heureux de m'exprimer devant vous alors que je viens de prendre mes fonctions comme secrétaire d'État chargé des partenariats internationaux, mais aussi de la francophonie. I would like to thank Germany for gathering us today and for your leadership on such an important topic. As President Emmanuel Macron and many others recalled at the United Nations General Assembly a few days ago, we need a boost of financing capacity, and this requires far more private sector leverage. This is an absolute priority for France that we are pursuing with 66 partners through the Paris Pact for People and Planet. I would like to thank Germany for its active support there. Paradoxically, the mobilization of private capital is one of the most consensual topics on the reform of the international financial architecture, with many interesting initiatives, and yet results are still slow to come. Therefore, the Hamburg Sustainability Platform is much welcome, and we wish that it will lead to new approaches and ideas that can finally deliver tangible results. We totally agree that blended financial is key, and that we need to make concrete progress in terms of simplicity, speed, efficiency, and blended finance instruments. France shared recently some proposals in this regard. But we also need to look beyond financial instruments and to consider addressing all significant regulatory barriers, both at national and international levels, that hinder that potential of private capital flows to developing countries. This is also something for the FOP is investigating. The objectives of this platform are totally in line with the ongoing fast sustainable infrastructure projects certification initiatives. We encourage all interested countries to join this initiative. The French Development Agency, AFD, is also very enthusiastic about joining the initiative launched today. We believe synergies are to be found between the platform and the agency's experience in structuring and coordinating networks at international players. This especially with regards to finance in commons next summit to be held in next February 2025 in South Africa, a founding country for the HSP. You can count on France's support to make this HSP platform a success, so that raising private capital at scale becomes finally a reality. Thank you very much.
Thank you very much. Si vous voulez rester avec nous. Next, I would like to invite Lina Ganløse-Hansen, State Secretary for Trade and Global Sustainability at the Ministry of Foreign Affairs of Denmark. Welcome.
Thank you very much. First of all, thank you to our German host for putting this important agenda topic to discussion. I think it's been clearly said both in the panel discussion and by the moderator that the challenge is clear. There is a financial gap between climate and SDG financing available. We are far off track, and we need all hands on deck in order to ensure that also private sector must play a role here, and we need to scale and we need to replicate models. Allow me just to say a short comment on an initiative that we have taken, Investment Mobilization Collaboration Alliance, with the Nordic countries together with the US, with a focus to use the fund from our public development assistance and budget to mobilize billions of US dollars in private capital in support of climate action. So, to put it shortly, what you have created here with the Hamburg Sustainability Platform from Danish side, we see that it can play a valuable role in closing the financial gap, and we are also proud to join the work in the platform and to bring our strong focus on innovative financing to the table. So let's do it.
Thank you. Thank you so much. Thank you. Now, representing the United Kingdom government, I'd like to invite Phil Stevens, Director of the International Finance Directorate at FCDO, and Liz Lloyd, Chief Investment Officer at BII.
Thank you, and thanks for the invitation to the event and to our German host for this wonderful conference this week. Over the last 10 years, since the last Financing for Development Summit, there's been an awful lot of work on this question of how we mobilise more private capital, and so many interesting and innovative initiatives. I saw Manfred in the audience from ILX earlier, which is something that we've supported. There's many other ideas and initiatives out there. But we've spent a lot of time this year talking to pension funds and insurance companies in the UK, and we've heard the same message that we heard from others earlier today, which is that really, if they're going to take the big step to invest in emerging markets and developing countries, we really need more standardization. We need products and vehicles that people recognize and that are well understood. We need common criteria for accessing blended finance. We need standardized, harmonized ways of measuring impact as well that savers can also understand in terms of understanding the impact that their investments are making. And that's why we as the UK are really excited to be part of this new initiative. So thank you to Germany for their leadership. We're proud to be part of it as well with our own DFI, BII, and I'll hand over to Liz in a minute. But we really hope that we can bring, as the UK, some of our own ideas and experience of, for example, some of the work we've been doing with Mobilise that Tamara is involved with, that's been working on listed products, which again are a standardized instrument that people are able to invest in, as well as some of the innovative work we've been doing with BII and the MDBs. So it is a pleasure to be part of the initiative. Thanks, Liz.
Thank you. So we absolutely share the sentiment around the urgency to invest in countries in South and Southeast Asia on climate and emissions, and in Africa on development and on climate as well. And that is what we at British International Investment, the UK's development finance institution, are committed to doing. And we do bridge the public and private, and we believe that we are custodians of concessional capital and held to account for its impact and for its use. We take seriously the fact that we bridge that gap. And we have a lot of lessons of embedding and driving standards, from ESG to impact to commercial standards. And we have the technical skills and expertise to structure these deals. And we very much welcome the Hamburg Sustainability Platform as a huge step forward in standardization, simplification, and in getting the finance going where it's really needed. So thank you all.
Thank you very much. Next, I would like to invite Vito Dellerba, Managing Director at Caisse de dépôt et de placement du Québec.
Thank you very much. For those of you that don't know, CDPQ is Canada's second largest pension plan. We have 450 billion in assets under management and represent 6 million Quebec citizens. We're a public sector pension plan. And when we got the call from the government of Germany to be part of this, along with Allianz, we thought right away that it was something that we had to be involved in. We're invested in over 70 countries around the world. We manage the large majority of our assets in-house, and we have very ambitious sustainability objectives within the fund, and we live the difficulties that we heard on this panel every day. And it's one of the things that we realize is that these bespoke structures, although they answer all of the issues of risk-return that we're trying to mitigate, and we know how to put them together, they're just not fast enough for us to get to where we need to go, and at the scale that we need to go. When you're a $450 billion pension plan, you're looking to build machines and factories where you can scale. And so here's an opportunity to be part of a solution that allows things to be standardized and efficiently reached by the private sector in order to get to the place that we need to be as a society worldwide. So we are very thankful to be part of this, and we hope to be able to put our stamp on what the private sector needs. Thank you.
Thank you very much, Vito. Next, I welcome Heyer Schutter, Deputy Director at the OECD Development Cooperation Directorate.
Thank you, Thomas. Dear colleagues, we think that the development finance system so far has really lacked cooperation and coordination towards standardizing blended finance. So that's really the reason why the OECD warmly welcomes the Hamburg Sustainability Platform. As many of you may know, the OECD has issued blended finance principles a while ago. We have guidance for our members and partners of how to implement these principles. And the updated version to be launched next year brings together a lot of practices of how to promote best practices in regard to standardizing blended finance instruments, processes, structures, agreements, as well as impact measurement and reporting. So the OECD, in an advisory role, will join the Hamburg Sustainability Platform. We will provide our data, our analytical work, our policy recommendation in order to have better policies for better blended finance and especially scaled up blended finance. Thank you so much.
Thank you, Hayat. And last but certainly not least, Dr. Andrea Hauser, member of the Management Committee of KfW Development Bank.
Good afternoon. It's not easy to be last in this lineup today, but as KfW Development Bank, we were able to get a relevant experiences with the mobilization of private capital via impact funds over the last 20 years. As of today, we hold, mostly on behalf of the German government, a portfolio of around 5 billion of catalytic capital. This sounds to be a lot, but as we all heard today, much, much more is needed. And so I just can echo what has already been said. We have to join forces, we have to co-create, and we have to move from niche to standard. And that's why we are really happy to have this, this innovative platform now here. And we are proud to count on our, let's say, experience and develop the projects and deploy them into the market with the ambition to do this in a standardized and predictable manner. Thank you very much.
Thank you. All right, this session has come to an end. All that is left for me to do is to thank everyone on this side, but also the audience for your patience and your attention. And I would like to invite the photographer to organize for the picture now. Thank you so much.
So
I'm not.